How you doing? Hope all is well with you and your family. Hope everything's going good. Wanted to talk about a question that somebody asked on Twitter, and I thought, this is probably a very common question. It's like a small thing that, people wonder and nobody ever really talks about, because I don't know why nobody really talks about it. So if you watch the charts, like let's say you go to coinmarketcap.com, right? And very often you're going to find that whatever the Bitcoin chart is doing, the rest of the market, the charts for the rest of the market, they end up doing the same thing. And they end up being, if Bitcoin drops down sharply, and you look at the charts on the other cryptos, on the altcoins, and it has like a sharp drop too, at exactly the same time. And if Bitcoin spikes, then it too spikes, and the charts often look very much the same, right? And what is happening is that Bitcoin is the largest market cap in the space, right? So the entire market cap, of the entire, crypto industry moves how Bitcoin moves generally, right? You have some instances where there's a decoupling that happens, where a coin decouples from Bitcoin, and what that means is it does it does a movement contrary to what Bitcoin's doing, and it looks like hey, this is now decoupling from Bitcoin in a way that is giving it its own independent movement, right? And whether that's up or down. There's some coins that decouple, but for the most part, everything moves along with Bitcoin. And what's happening is you got a lot of traders out there, the people who are hodlers. You buy on exchange. Hopefully you do this. You buy on exchange, and then you pull your crypto off the exchange into your own private wallet, because if your crypto is left on that exchange, hacks can happen, which have happened to exchanges in the past couple of weeks. Exchanges get shut down by local governments and whatnot. And so if your crypto's on that exchange, guess what? Your crypto just got hacked, or your crypto just got locked up by a local government, and you can't withdraw it anymore. Look, the coins are decentralized. Bitcoin is decentralized. Ethereum is decentralized, for the most part. And many other coins are decentralized. Exchanges are centralized, and that is where the danger is. Okay, that's where you don't want to be caught with your pants down on an exchange, because let's say you get hacked and you lose your coin. It takes weeks and months, maybe even years, to get your coin back. And let's say this exchange is operating out of a territory where the government or the local government was friendly to crypto, and maybe administrations changed, and now they're not friendly to crypto, and exchanges can get just shut down just like that. And what happens is all the crypto on there gets locked up, and the government decides what to do with it at that point. So you buy on exchanges, which is great. You buy on exchanges, get your coin, and then you pull that coin off the exchange into your wallet. So hodlers, that's what we do. Okay, traders, you're keeping your money on exchanges because you're zigging and zagging and buying and selling and trying to make plays and trying to get 4% and 10% and 20% and 50 and 100% gains, on a trade, because you want to try to outsmart the market, which is good luck. But when that happens, and if you're in an altcoin, like I've been in altcoins, as far as trading goes, been in altcoins myself, and you're looking at what's happening to Bitcoin, because that's basically what's going to determine, what's going to happen to your altcoin. So when you're hodling, let's say you're in a position, you're trading, right? You're actively trading. You're in a position, and it's an altcoin position. You're watching Bitcoin. You're going to see what the price of Bitcoin is, because that's really going to help you determine whether or not the price of your altcoin is going to go up or down, right? The price of Bitcoin and where it's at, and the momentum of Bitcoin and the Bitcoin chart signals to other traders the momentum of the market, typically, right? Now, if Bitcoin goes down, right, and it's going down, it signals to other traders, hey, sell this altcoin because it's also going down. And and the reason why Bitcoin can be like a pretty good signal on the short term is because altcoins move more drastically than Bitcoin does, right? Bitcoin might be down 4% and altcoins will be down 10%. You know what I mean? Bitcoin will be up 15% and altcoins will do 20%, 30%, right? They'll just move up at a disproportionate value than Bitcoin does, up or down. But that's why watching Bitcoin is a good signal, because if Bitcoin goes down 1%, it's likely that altcoins will probably move down 2 to 3, right? And so you can get out, and by getting out, they dump the price by 2 to 3%, most of the traders, right? And it kind of becomes a self-fulfilling prophecy at the same time, right? Like, if you're looking at Bitcoin, it's not, is it that the market is making the altcoins go down, or is it that the traders watching the market are making the altcoins go down or up, depending on how Bitcoin moves? And, that remains to be seen. Like, that's like the chicken or the egg theory, right? What you'll find when you get into technical analysis with trading is that, there's not necessarily a rhyme or reason why things are going the way they do according to the chart. It's like there's no definitive answer as to why the chart works. So if you're reading it, like, let's say, like for right now, right, I'm looking for Bitcoin to make what's called a triple bottom. And right now it's hit a floor. I think it's like 46,000, and it was around that range, right? A $46,000 floor. It's hit that 2 times already. It's hit it, came up, failed rally, came down, hit that same floor, came back up, right? And we're like, maybe we're gonna fail on this rally too. I don't know. Maybe it's just a double bottom. But typically, when you hit a triple bottom, so if it fails now and it comes back down to 46 and it holds at 46, that is a bullish indicator, right? Like, creating that pattern on a chart is a bullish indicator for, a moonshot, basically, right? So I'm looking for a triple bottom right now. There's no real reason why a triple bottom, makes a bullish indicator. Like, I can't tell you, like, it's because of the fractal harmonics with the, Fibonacci retracement lines, and due to this pattern, it causes illiquidity in the market. Nah, I don't know. I have no idea. Nobody does. Now, everybody has a theory, but nobody really knows why it works. But when you see triple bottoms, you typically see a bullish pattern right after that, strong upward momentum on a price. I don't know why it works, right? Another thing is, like, before this triple bottom, or if you look on some of the smaller intervals to make that first failed rally to hit another bottom, on an hour chart per se for Bitcoin, it creates what's called a Bart Simpson head, right? Where it's like, it ranges in a very tight space, right? You have a pop, and then it ranges in a very tight space, and it goes up and down, and it prints this pattern, and then a drop, right? And typically, when you see that drop and it makes a Bart Simpson head, it's a bearish pattern. Like, the market should go down further from there. However, it didn't, you know what I mean? And then you can do upside down Bart Simpson heads, and typically, they'll go up after that. I don't know why it works, but it like, these patterns show up. You're able to recognize them. You're able to make movements on them. I don't know if the pattern itself dictates the movement, or if people are looking at the pattern and trading on it, and everybody's doing the same thing. And so, when it hits 46, people feel like, okay, that's a bottom. I'll buy there, right? Because then it's going to pop back up. And sure enough, if you did, you were right. You know what I mean? I don't know why it works, but it works. Another thing is like Fibonacci retracement lines. There's the golden ratio, and then there's a string of fractal harmonics, right, that go along with it, right? And it's like natural numbers that are found throughout nature, right? If you apply mathematics to nature, you find it all the time in terms of ratios and particular patterns and shapes and whatnot, right? So you take that, which Fibonacci retracement lines, and golden ratios and all that stuff. If you take that and you layer it on a chart where it has different levels, I don't know why, man. I don't know. They've indicated that, and I don't know who they is, but whoever's created these Fibonacci retracement lines, they've indicated that between certain numbers on the ratios, that those are bearish or bullish, or those signal tops, price tops, or price floors. I don't know why. My bro Lucio, he draws them all the time. I look at his charts, right? Like, we look at the same exact charts. He draws charts, I watch them. And they look dead on to, where the price movements are. Like, his Fibonacci retracement lines are spot on. Like, it hits the top when he puts it there, and it ranges to the bottom when he puts it there. I don't know. I don't know why it works. It works. He'll draw channels, which are basically like, trajectories lined among the tops of prices and trajectories lined amongst the bottom of prices, and they just go perpetually through the whole chart. And you just draw these lines, however you want, you know what I mean? But he draws them, and he finds that, I find, watching his charts, that they stay within those lines, the channels. The price stays within those channels. When it starts to hit near the channel that he drew, it pops back up, and it doesn't break that channel. I don't know why it works. I could not tell you why it works. Maybe because he's been watching literally every single candle on the Bitcoin chart for the last 5 years. He's like, really good at dialing it in, but he's not the only one that's doing this. I don't know why it works. I don't know why it does that. But just so you know, people are trading on these like patterns, on the technical analysis. I can't tell you if the patterns are themselves, are indicating these things, and that's how they got, where they're at, or if people are looking at it and looking at the patterns and then making trades based on the patterns. I don't know, but they seem to be working. There's some people out there, they just want to throw out technical analysis. They think it's so stupid and dumb and whatnot. It's kind of like astrology, right? Some people think that, astrology is just really stupid and dumb, and I feel it. You know what I mean? I see the logic in that thinking, but sometimes it's eerily right. You know what I mean? And some people try to say like, oh, you're just playing the odds. If I say you're gonna get hit by a train every day, and then you get hit by a train, like, oh, some people be like, oh man, Teddy called it. You know what I mean? Well, he said it every day, but that's not really how these things go. And there's no rhyme or reason to explain it, dude. Like, maybe there's an understanding, maybe there's a misunderstanding of astrology for those who believe in it, and also a misunderstanding of astrology for those who don't. You know what I mean? Maybe there's a misunderstanding of technical analysis for those who believe in it, and maybe there's a misunderstanding of those who don't believe in it. You know what I mean? And until we get a full and complete understanding of what it is and how it's working, we may always look at it the wrong way. I don't know. I'm just throwing it out there. But yeah, man, it's my 2 cents, If you want trading advice, there's a couple channels. Well, you can always hit up Lucio, but there's also a few channels that I think are good to watch also. And that is what's it called, man? What is it called? Brandon Kelly, crypto trader, BK crypto trader, creator of the Boss Method, which has worked for us for quite some time. And then there's also Alessio Rastani, Alessio Rastani. He's by far, to me anyway, of all the YouTubers I've watched, he knows the absolute most amount of technical analysis methods, right? Like bullish indicators, bearish indicators. This guy, he has a library full of these kinds of indicators, and he explains them very well. So yeah, man, that's my 2 cents. Love you. Hope this was helpful. Be safe. Peace.